These stocks are going insane. I split $1,000 between 10 different high growth stocks for 2025, all for this channel, because I was missing out on some of the growth aspects that I used to trade, and I'm really excited for the results we have seen. And I don't think you're going to believe them. It's crazy what this portfolio has accomplished in like 7 or 8 weeks. Now we're going to do a full breakdown on all the stocks. I chose 10 of my favorite under a couple different sectors that I think are going to do really well in the next 5 years, to be honest. And my plan is to hold these indefinitely. I don't know if I'll sell them. I don't know what is even going to happen with this account, but so far the results are very, very shocking. So if you guys are into growth stocks, into making money in the stock market, even into some dividends, don't forget to like the video and subscribe. Thank you guys so much. Let's roll that intro. All right, little spoiler alert, I'm already up $161 for a total return of 26.83%, which is crazy. I'm up 26% in a month and a half. Absolutely nuts. Let's go over all of my positions so far. So first I have Tesla, the worst performer in the account. We're going to put all of these into a new software that I've been using just to get a little bit of basic information about them. But Tesla, it is beaten down quite a bit. Then we have PLTR, which has been doing really, really well. We have SoFi. All of these you guys can see are kind of new tech-ish style, these first 3 or 4. NVDA, of course, it's been doing insanely well. So I thought, throw it in here. Even if it pulls back a little bit, which it kind of did, I'm still happy with it. AMD, I think, is an undervalued play. We're going to look at all the numbers on these, of course. Zscaler is cybersecurity. If you guys are not interested in cybersecurity, you're going to get really upset because I have a lot of cybersecurity stocks in here, and it's because I think that sector is going to do phenomenally over the next 5 to 10 years between AI, between cyber attacks. I just think it is. I think it's gonna go nuts. We have CrowdStrike, another cyber security. We have XYZ, which is actually Block. I think it used to be called Square. It's a payment system that also uses crypto and has crypto. So, boom, best of both worlds. Then we have AvePoint AVPT. This was a sales as a service company, or it is a sales as a service or software as a service, which is really, really cool. It has something to do with finances. I can't even remember all these. They're getting so mixed up in my head. And then we have Palo Alto Networks, which is PAN-W, another cybersecurity. You guys can see the themes that I have here that I really, really like. And again, our biggest loser is down 9.5%. Our biggest winner is up 77%. So let's dive in and take a look at each of these companies. I've been given access to the 1000X Stocks platform. Their website is phenomenal, and they were super kind. It's from a larger YouTuber who created this with a couple partners in order to make trading easier for the average investor. If you don't know me, I'm an average investor. So I think it was super nice of them to let me use it, and I'm really blown away by it, honestly. So what we have Tesla plugged in, gives us our price of $355 and a market cap of $1.14 trillion, which is insane. Now we can see that the trailing 12 months PE ratio for Tesla is 175. Many stocks trade at 20 to 28, kind of an average over on this side, which I think is really, really important. And you can see the 2-year forward PE for Tesla, 108, and for the average, 16 to 24. So again, there's always outliers, but let's talk about PE ratio with Tesla. A lot of the stocks in the account that I have created with my growth ETF, which is kind of what I'm calling it, their PE ratios are insane because they're not really valued like an old style stock would be valued. And that PE ratio, the way I used to trade, I would focus on PE ratio, and Tesla would always blow me away. Like if I had never bought Tesla because the PE ratio was too high, I would have lost out on thousands of dollars in return. And I'm not even joking around by that. The PE has always been super high because it's valued as a car company. And it is a car company, but really it's more so a tech company. And that's what goes into these cars. It's all tech. And so it's very futuristic. It's higher risk, higher reward. But that's why. That's why I'm okay with a lot of these companies that their PE ratios are insane because I believe in them. I believe in what they're doing. You have trailing 12 months revenue growth. You can go all the way down. There's tons of metrics on here. You can see the advanced metrics. Last year, EPS growth of 19%, which is more than double, kind of about double what the average is. And so there's a bunch of good stuff on here that I recommend you guys check out yourself if you're interested. If you want this service, check out the link down below. I'll link it at in the caption of this video, in the description, and you guys can check it out for yourself. They also have a bunch of stuff for dividends. We can see price to book, price to free cash flow, and then you have dividend yield and dividend payout ratio, 2 very important metrics. And you kind of want to use these on the side, the averages, to look at everything. Now we're going to jump into the charts section. So I'm going to type in TSLA. Tesla's going to pop up, and we can actually see, like Tesla, this is the predictive, they're, what's expected to do based off of analysts from all over the place. Tesla's bounced around quite a bit. They're looking pretty good. Revenue 97.7 billion. They had is that an all-time high? 97 billion. Yeah, it's an all-time high revenue for Q4 of 2024. I think 2025 they're just going to continue to rock it. But again, I'm long on this stock. I'm okay with the risk. Net margin percentage versus gross margin, and then you have, of course, their EPS, which it's been interesting, man. Their EPS has just, look at this growth, continual growth, which I love to see. And then free cash flow, tons of metrics on here, and you can utilize them all however you'd like. So Tesla, that's why I chose Tesla. I think it's going to continue to rock it. There's no real reason behind me picking Tesla, to be honest. Like, there's no metric that stands out that I'm like, I love Tesla. Let's do this. I like the product. I've seen people use them. I see Elon Musk as someone that I think will continue to push Tesla to be the top of its class. And these luxury EVs, the EVs that are trying to compete with Teslas, they're not able to do it. Like what? The Ford EV had some of the most outrageous problems in the last couple of years. They could not even get it to work in some scenarios. And I almost bought one. I was actually looking at those. They're a fortune. And so Tesla is working to lower their prices to make the quality better. And although they are kind of cheap and plasticky cars, I think that the luxury aspect that goes into them and the ability to not have to pay for gas that seems to keep going up is just going to be absolutely amazing in the future. So that's Tesla. I'm not going to take this long of detail on every single stock. Let's jump into our next stock. If you thought Tesla's PE ratio was bad, you're not going to like PLTR. 630 compared to the average of 20 to 28. The nice thing is the trailing 12 months EPS growth, 111%. Absolutely crazy. Revenue growth is up 28, almost 29%. There's a lot of good metrics on here. We can see margin last year. They're turning profitable as they put it here. They're not quite profitable yet, but they're on the cusp. And PLTR is another play that I like the CEO. I like the CEO a lot. Seems like a really level-headed guy, knows what he's doing. And people have a lot of faith in him. And the fact that PLTR ties in with, with AI and with future tech, I think it's just going to boom. And to be honest, it has. It's the best performer so far. I'll show you guys all at the end of the video. PLTR's charts are just stunning. So what's really, really cool, I love that they do this. You have the period, which is Q4. You have revenue, $2.87 billion, and year over year, it's up 16.75%. What does year over year mean? That means from Q4 of 2023 to Q4 of 2024, it's up 16.75%. It's just a good metric to show you how much growth they are having year over year, of course. Now, you guys probably know that. If you don't, that's okay. We're all different kinds of investors, new and old here, so don't feel bad. We can see EPS, they went positive in 2023, and 2024 was a pretty decent year, and they're anticipated to just blow it out of the water, apparently. According to analysts, that's what they're looking like. Quarterly, we can see, they took a bit of a hit. They're still up year over year, it's looking like, but they've got some growth on the horizon. At least that's what we are anticipating. All the way down, operating income. Income is up. Finally, they are positive again, 2023. And then you have shareholders' equity, which is just continuing to grow. PLTR, stock price $120 and a market cap of $271 billion. About a fourth the size of Tesla, not even. So that just shows you the difference in the size of Tesla. But PLTR's PE is still absolutely insane. Let's jump into our next stock. We're slowly coming back down to earth. We have SoFi Technologies, trailing 12 months. That's hard to say. 3 times fast. PE ratio, we see it's 78.84. Many stocks traded the 20 to 28. EPS growth, turning profitable. If you guys aren't familiar with SoFi Bank, I love it. Personally, maybe I'm biased because I like the stock a lot. Revenue growth is up 30%. I just think they're kind of the future of banking. You don't want to go, I don't like going into places. Maybe it's very introvert of me because I don't like talking to people, but still, it is just nice doing everything from my phone. And they have some really cool tools and such. And the people, I've talked to them about a home loan and whatnot, and they're very, very nice. Very, very nice. So we can see last year revenue growth is up 35%. They are growing in numbers like mad. Like people are loving it. It's so easy to set up an account that it doesn't hurt you to have an extra bank account. Plus their high yield savings account are like 4%. So at no risk at all to you, you're getting 4% on your money, which is crazy. Most banks offer you like 0.01% or something like that. Like, I'm not even joking. It's like a penny per $1,000 or something like that. And so SoFi is changing that. So there are some metrics here. Free cash flow yield is down. Return on equity, 3.61%. Not great. Most are 15 to 21. So you're taking a risk. You're definitely taking a risk. Let's take a look at the charts for SoFi. And we can see, I mean, the thing is a lot of these companies I'm looking at, like, it makes it look normal, but this year-over-year growth is insane. Like, especially with revenue. Like, the revenue is just up and up and up. Like, if every year from Q1 to Q1, they're up 50% in revenue. That's like unheard of. But these companies, they're doing it. They are definitely doing it. We can see they just got green on their EPS. Year over year, it's looking really messy. But they're still, some of these metrics are going to be a little bit wonky because the numbers are very, very, I mean, it's close. They're still only at like, what, 20 cents, 18 cents. And so they're projected to grow quite nicely over the next couple of years. And I think 2025 should be a good year if the market stays relatively consistent. They're down on free cash flow. Operating free cash flow, operating income, all of this. Shareholder equity is up ever so slightly. Not great, but not terrible. So, SoFi, it's boomed lately. Stock price of $16. I remember trading this when it was like 4. It was like $4.50. And I was like, not yet. Lower market cap of $17.6 billion, which gives us some good opportunity for growth, in my opinion. I like having some huge stocks like Tesla and some lower ones like SoFi, although $18 billion is still pretty high up in market cap. So, one of my absolute favorites, just because I know the product and I love it. I'm very biased about SoFi, so don't come to me for an unbiased opinion. Let's jump into our next stock. I have to have NVDA on here. I mean, more realistic PE ratio. It's come down a little bit. Stock price 140, market cap 3.4 trillion. That is absolutely nuts. I did not know it got that huge, but between AI and everything they've been doing with their investments, I mean, this company it's massive. It's absolutely insane. Trailing 12 months EPS growth, 234%. Like what? Absolutely crazy. Revenue growth, 152%. I can't believe what NVIDIA has been doing. Again, small dividend, like let's see, 0.11%. Not a lot there. Free cash flow is fine. There's a lot to this company. The PE ratio it's good. It's better than I expected because the growth has just been insane. But I'm just pumped. I mean, they even have it slowing down in 2025, which I'm not surprised about. And this, of course, is for their revenue. But like, it's up 57% year over year, 9%, down 12%. Let's see, 60, 44. Interesting. Their revenue, I mean, it just has skyrocketed. And they're to the point where it's almost like an ETF itself now. Like, because they hold so many other small companies. That's the thing. They own all these companies that they want to buy, but they can't. If you don't know, NVIDIA, they've been blocked a couple of times from buying different companies to keep it from becoming a monopoly. And it's just crazy. EPS, $2.54. Oh, wow. Year over year, 234% up. Just crazy. Free cash flows up. They've been investing money like nobody's business. Operating income's up. Shareholder equity is well up 98% year over year. It's just crazy what this company is doing. It's a huge company. I had to put it in here because I've been missing out on the run so far, and I had FOMO. That's literally it. I can't even remember if it's up or down from my buying price, but we will see that at the end. Stick around for that portion of the video. Let's jump into our next stock. Probably the best bounce back play in this account, AMD. It's beaten down. The TTMPE is 112, so very, very high. 2-year forward PE is 22. Their EPS growth is still 92%, but this thing, the price is just beaten up. Their revenue growth is low, 13.7% compared to what was NVIDIA's in the hundreds. Absolutely abysmal in comparison, but that gives them some bounce back potential. Last year, their EPS growth was actually negative 40%, which is crazy. And like I said, this thing has been beaten up like mad. If you look at the stock chart, it's really, really ugly. No dividend. We'll jump into the chart for this guy. And this one, it's probably one of the uglier charts that I've seen simply because it is super beaten down. There's less prospects. I mean, it's revenue is still, I mean, it's still good. It's still good. Year over year, though, they're down 3.9%. So it's got to pick itself back up. And that's really what I would really like it to do, is pick itself back up and not continue to fall, because it might. And I don't remember if this one is red or not either. It's been a couple weird months in the market. We can see it did go up in EPS, dropped down by 12 cents. Man, I mean, just some of these metrics are just so strange. Free cash flow, operating cash flow, that's not one I usually look at too much. Operating income. Shareholder equity stayed pretty stagnant. Not some crazy returns on this guy so far in the last couple of years. Even some loss in share value, which is definitely a bummer. But it looks like they're still expecting it to do relatively decently, albeit a little more rocky than what we've seen with some of the others. So AMD, it's a bounce back play. It's microchips. There's a reason why I like this sector. I like tech. I like growth. And this one kind of ties it all together. Even if I do lose a little bit, I mean, a huge market cap of $183 billion. It's $113 a share. I'm willing to risk it. I'm definitely willing to risk it. Let me know what you think in the comments. Let's jump into our next stock. Zscaler is a big one. Ticker ZS. It's $212, market cap of $32.64 billion. The PE, negative 871, which is not good. Definitely not good. So it's got some ground to make up. Looks like it's turning profitable as well. EPS growth is up 78%, but still in the negative, so it's something to watch for. TTM revenue growth is up 31%. Not bad, not bad. There's still a lot for this company to grow into. Like I said, the sector is I think it's multi-billion, maybe one day even multi-trillion. That's pretty big. But eventually I think it'll get there, because cybersecurity, everything's going more into tech spaces, cloud services, crypto, AI. AI is a huge one. You do not want anyone breaking into your AI systems, changing things, anything like that. So cybersecurity, I think, like, how are you going to get better than that? It's one of the main sectors I'm investing in, fully expecting it to do really well. And I mean, we've watched this thing grow just insanely well. 44% year over year, 48, 52, 56, 60. And again, there's still more room to grow, because it's continually done that. We can actually scroll down and see they are positive almost. EPS, they're expected to be positive by next quarter. Not quite yet. So again, we know that there are some growing pains with a lot of these companies. Operating cash flow, operating income. Shareholder equity is up because the price has been booming. You know, this thing has done really well. I think it was up 30%. Was it? No, it was CrowdStrike that was up 30%. I think Zscaler, I can't remember. Was it a 10% gain? A lot of these, I mean, if 8 of the 10 are already up, some of them, you know, a lot of them that are positive are well over 10% in return, which we'll look at. It's just crazy what these companies are doing. And these are the leading parts of the sector. You know, I bought almost everything that is in the cybersecurity space because it's all doing well. And I want to diversify, of course. So I'm really pumped with this one. Let's jump into our next one. Of course, we have CrowdStrike. I think it comes in at the winner of an 892 trailing 12-month PE ratio, average of 20 to 28. EPS growth, it's turning profitable. A lot of these, I'm going to keep saying it, a lot of them are not profitable yet, but their EPS growth is really, really good. Revenue growth, 31%. So there's some hope. There's a lot of hope. And people are seeing that, and that's why the PE ratio is so high, and people are still buying this company. I'm not going to beat a dead horse and say over and over why I think cybersecurity is useful. If you have any passwords or anything on your computer, you already know why. If you have a password on your phone, you already know why. We don't want people in our information, that is for sure. Stock price of $451 and a market cap of $111 billion. So on the bigger side, not as big as some of the ones we've been looking at. We are green on EPS, which is good. So they're a little farther ahead than some of the other ones, specifically Zscaler. We can scroll all the way down to the bottom. I like seeing the shareholder equity and the year-over-year return, which is really, really solid. Looking at a normal chart for these is very helpful as well. But I like that 1000X has all this data on here. It makes it so simple to just look everything up. And you actually have a compare button too, where you can put like 2 or 3 stock tickers in there and compare them, which I will use for future videos, but not for this one, because I just want to give a full breakdown of why I chose each of these stocks. So jumping into our next stock. Of course, we have XYZ with a pretty good PE ratio of just over 47. Stock price at $84, market cap of $52 billion. Huge, absolutely huge. Some of these stocks, I was like, I have no idea how they're this big, but they just are. EPS growth, turning profitable. Next year, EPS growth, 93%. Trailing 12 months revenue growth, 14.75%. Next year, revenue growth, 12.75%. A little bit slower, but not bad. Moving all the way down. Again, you'll want to pick out your metrics that you like to invest in. Specifically, I point out the ones that I typically look for. Last year, revenue growth was 25%. Good, definitely good. And then all the way down, no dividends. A lot of these, I don't think any of them really pay a solid dividend because I have a dividend to YouTube. So I put most of that stuff on there, although this account I do talk about dividends as well. But still, these are just growth. If they pay a dividend, good, but I didn't even really look into it. Now we can see the revenue, absolutely solid, year over year, 22, 20, 12. So a bit slower. And that's the thing. This one is large, 52 billion. It is going to have a little bit slower growth. It's tied into crypto and payment services, which I really, really like. But those ones have kind of had their peak. But I do think that there's room to grow. The fact that they're integrating crypto into this, they're not super positive. Like EPS was still negative in 2023. So they have some time that they need to make up. It should be, doing a little better than this in my opinion. It's looking a lot like some of these other stocks I've been trading that are some of the ones even in this video where it should be farther along. It's just simply not, which is a bummer, but I still like it obviously because I'm buying it. Year over year, shareholder equity continues to move upwards, which is a good sign. So XYZ, solid, decent pick. Probably not going to be the best performer. Probably won't be the worst performer, but only time will tell. Now it's time for our next stock. We have AVPT. So we have a negative PE ratio, 451, which is outrageous. The 2-year forward PE of 73.5. We have trailing 12 months EPS growth, huge. 80%. It's turning profitable. That's what we'd like to see. Revenue growth is up 21%. A little bit slower, but there's a lot of potential for this one. Software as a service or sales as a service. I can't remember which one they specifically use. It's SaaS, SaaS. I think it's software as a service. I mean, it's such a good industry. It's such an easy, marketable product that you can use over and over again. I'm tired of all these subscription-based things that I have to pay for all the time. And so I like that they're doing that, just the software as a service. And they do get, not subscription money from it, but, they do get reoccurring revenue based off of what's going on. If they're updating the services, if they're, when it comes to new clients, when it comes to expanding the products. So it's really, really interesting how they're doing it. And I like AVPT. It's one that I didn't know as much about, and I still don't know as much about as a lot of these other ones. Stock price is low, 19.44, and a market cap really low of 3.65 billion. This is probably the riskiest one that we have on here. Free cash flow, it's actually not as bad as I would have anticipated, but still, let's look at the chart. I fully expect these charts to be really ugly. I can't even remember the last time I looked at them, to be honest, but it's been a little bit. I mean, they're projecting decent growth, 17-18% year over year on the revenue. Scrolling down, EPS, they're expected to go green in 2025. We'll find out at the end of this quarter, so a couple months here. Trailing 12 months, also not bad. Free cash flow is going up. Year over year, it's going up massively. Operating cash flow, operating income, finally green, looks like. 2024 Q3, I don't know what Q4 is, not on here. And shareholder equity has bounced around a lot. When it comes to these companies that are higher risk, the equity is going to move quite a bit. So, again, it's risky. I'm not saying that it's not. I just like it. I like it for a growth play. It'll probably either be the best performer or the worst performer in the account, although I know it's not the best performer because that, again, is PLTR. Let's jump into our final stock selection, and then we'll take a look at our dividend spreadsheet. PanW Cybersecurity. Not going to give you the whole spiel. You guys know why I like it. A PE of 113, 2-year forward PE 58. Scrolling down here, EPS growth is down for PanW. It's been interesting. The stock chart on this one is really interesting. It's kind of ugly, to be honest, but I just like cybersecurity, so I bought it. Revenue growth 14%, a little bit on the lower end. Scrolling all the way down, last year EPS growth, turning profitable. No dividend, of course. Free cash flow 1.29%. There's not a lot that sticks out with PanW. It's a larger one, $131 billion market cap, $200 per share. Now, this one was like a last minute, like, do I want it? Do I not want it? I have Zscaler, I have CrowdStrike, but I just wanted a little more Just a little more. Maybe I should have bought MSTR. Maybe I'll add that to this instead. It's not too late. I could swap it out quickly. I've been debating MSTR. Let me know in the comments if you think I should put MSTR over PANW. But we'll look at this one anyway. Net margin, I mean, it's had good growth, better than some of the other ones, better than AVPT, but it is a larger company by a pretty significant margin, by like over $120 billion. But AVPT has that growth factor that it could just blow up and do really well. Operating income, and then we have shareholder equity, which is continuing to grow. Huge amounts of money, $6.4 billion. So that's all of them. Let's jump into our stock tracking spreadsheet. I'll give you the full breakdown on what's made me the most money, what's lost me the most money, and everything in between. I definitely called this the dividend spreadsheet. It's what I'm used to for my other channel, so slip of the tongue. So what's our biggest winner? What's our biggest loser? Well, total return-wise, biggest loser is still Tesla at down almost 10%, 9.6%. And then next we have AMD that's down 2.31%. But those are the only two red, which is shocking to me. Absolutely shocking to me. We have NVDA up 2.4%. It's been rough for that one. XYZ is up 1.5%. And then we move up to Zscaler, which is already up 11.5%. And then, man, these next ones are close. So we have SoFi is up 15.3% and PANW up 15.34%. Now, I still might swap PANW for MSTR. Let me know what you guys think. Again, let me know in the comments. I'm really curious because MSTR has just been doing so well, and the better Bitcoin does, the better MSTR will do, in my opinion. And then we have AVPT, which is up 19.93%. And that's what I said. This thing will probably be the best performer or the worst performer. And right now it's leaning more towards the side of best. Then we're starting to make some crazy jumps all the way up. Zscaler is up 29.2%. 10% more than the other, but it's not even close to our top performer of PLTR, up 77.72%. This thing is so insanely up. It changed the portfolio allocation to where it's 15% of the portfolio, and it sucked away all these ones that have dropped. Now Tesla is the smallest percentage because it is more beaten down. So you guys know, if you're familiar with the spreadsheet, you can go over to market value, cost basis, dividends received if they pay a dividend, and then down here we have all the different tabs. I love this spreadsheet. Had it created. It's available on my main channel in the tier 3 membership. Helps me do all these challenges because this stuff takes a lot of money, let me tell you. But still, I'm really, really impressed with a lot of these and how they've returned. And I mean, like I said, we're up heavily, like $77, $15, $2. We have two that are slowing us down, and they don't even take away half of what PLTR has already returned. So if this is any indication of how this will do all year, I am very, very excited. Let me know what you guys think down in the comments. Don't forget to like and subscribe so you don't miss an update. I'll be updating this every single month so you can see how these stocks are doing. Let me know if there's anything you think I should buy, if I should put MSTR over any of the other ones in this account. I really appreciate you guys for watching. If you like this video, check out these two other dividend videos, which I think you will also really enjoy.